So, hi everyone. My name is Sunshine, and I am the host of today's AMA with Blocksquare. And we have Denis here with us. And from his profile, it shows he's the CEO of Blocksquare. So, we're happy to have you here, Denis. So, before we start talking about the project, can you briefly introduce yourself and maybe other teammates you may have who are behind Blocksquare project?
Sure. First of all, Moonshine and everyone in the Gold Diggers community, thanks for the invitation to this AMA. As you mentioned, my name is Denis. I'm the CEO of a company called Blocksquare. Um, and yeah, Blocksquare is basically something we started back in 2017, officially 2018. And we have now developed this amazing infrastructure that can bring any real estate asset on chain and make it investable for um, anyone with an internet connection.
Nice. So, how many people are in your team? How many of you guys are behind your team, and where are you guys from?
So mainly the team is from Europe, but nowadays we're counting almost 40 people. And our team is distributed across different geographies. We have people in Australia, we have people in the Middle East, in Europe, as well as some members of our team are also US based. So I would say that we're kind of grown into real um, global distributed team. Yeah.
Nice. So, I think we can now walk through the whole ecosystem and what Block Square is actually about. So, can you briefly walk us through about the ecosystem? Because I see you guys have four main branches, which includes both tech, product, business, and legal stroke sales. So maybe you could just briefly explain these four different parts, and then we can start asking specific questions about different aspects of the project.
Yeah, sure thing. So Blocksquare is a provider of infrastructure for the tokenization of real estate assets. Um, what it means is that we have developed a tokenization protocol. It's built on Ethereum. And then on top of this, we have created a platform for marketplaces and marketplace operators to kind of launch their own online shop in a way, but where they can list tokenized real estate and on the other side, bring it to specific communities. For instance, we have a partner we have several marketplace operators. I'm mentioning this because I know you guys are kind of Africa, mostly focused on the African region. We have the first partner there in Uganda, marketplace operator. I'm operating under the brand of Paimi, and they are in the hotel and residential sector. So, and then we also have a liquidity engine, which is bringing these tokenized assets to the liquidity of DeFi. Um, so this liquidity engine, it's called Oceanpoint, and it's also a way or a place where a lot of our community of token holders is able to earn by providing different services, if you will. And currently, this is by staking our token, which is BST. They can earn APY, or they can buy real estate assets and stake to earn boosted returns on the kind of more traditional returns that real estate assets otherwise give. Um, and all of this altogether is then tied. So the transfer of value of a single real estate asset onto tokens is tied through a legal framework that we have developed and with which we are able to transfer the economic rights that derive from the ownership of a real estate asset onto tokens.
Nice. Thanks for that brief introduction into your ecosystem. So now, a part of the project that I really had interest in is the tokenization protocol. So when you're talking about the real estate property, what steps are taken to link these properties and its revenues to the smart contract? I think you guys called the smart contract the prop token. So what steps will investors take to actually link the real estate property and its revenue to the prop token smart contract?
All right. So I'm assuming here that we're talking about from the perspective of a real estate owner. How is that process, being
Yeah,
conducted, right?
yeah,
Okay.
definitely.
So yeah, so far what we've been able to figure out is how to transfer the economic rights um, that derive from the ownership for properties, so for real estate assets that are owned by a company, an entity like an LLC of sorts, right? So limited liability company or any type of formal kind of company. We're not yet fully able to transfer this rights for properties owned by individuals. However, we see that this in the future will be possible as well. Now, going back to the process itself, the company owns a bundle of rights when they own title to a real estate asset. And this bundle of rights gives you the ability to use the property, to rent it out for money, so creating economic benefits, to resell it at another price or same price as you bought it. It gives you the ability to change it according to the kind of rules of the municipality. They tell you can build a 2-story building. That's what you can do. You cannot build a 10-story building maybe on that plot, right? So this is the bundle of rights that you receive when you purchase title of a property. Now, some of these rights, it's called economic rights. And this means any kind of activities or any kind of rights that give the owner some kind of economic benefit, whether that's through lease agreements, so renting it out, or the resale of the asset itself. Now, we bundle those rights with a legal document called the corporate resolution, which is a very standard document that is used in corporate law for decades, it's not even centuries. Usually it's used to make some kind of changes within the company, maybe changing the director of the company or changing a certain policy within the company and so forth. So this resolution is executed on the level of the shareholders. So they do a shareholder meeting, they execute the resolution, and they transfer a proportionate amount of these economic rights onto whoever holds the tokens of the specific asset. This resolution, after it's executed, and we have templated how it's created on a legal, from a legal standpoint of view, is then registered, or let's say copied into IPFS and registered and linked to the smart contract on the blockchain. So a hash of this PDF, let's say, is then registered within the prop token contract, and the contract itself has a hash, and that hash is referenced in the corporate resolution. So it's very clear that they work jointly. So the tokens are tied to the resolution, and the resolution to the tokens.
Nice. Just because you mentioned the corporate resolution, unforeseen circumstances could happen, and this could cause the issuer maybe not to pay for some time. So when the investors who want to maybe appeal in courts, should the issuer stops payments, can this happen immediately? Or is there a minimum time frame that will be granted, considering the fact that there can be unforeseen circumstances? Because I wouldn't think it would be fair if these corporate resolution is just taken to courts and trying to sue the issuer just because he stops payment, because you or maybe the investors may not know what may have happened. So I feel some certain duration of months or time should be given as grant. What do you think about that?
What we're trying here to achieve is, and you point here a very good question and a very good point, basically, is litigation. litigation is something that people want to avoid. You don't want to get in a situation where you need to sue somebody. Why? This is expensive, it takes time, and in many countries around the world, the legal systems are not so efficient. So this corporate resolution, I would say it works really well where the legal proceedings are efficiently implemented in the system of that jurisdiction. Okay. Now, if we go outside of this, let's say, golden few countries in the world where this works really well, you need to have more security. And that's where we have achieved something of a world's first, and we have been able to notarize the tokenization. Now, through that process, that notarization process, what we have achieved is direct executability of the right. So this means that the token holders, should there be any um, issue in the payouts, there's payouts are not being done, or there's a default on the title by the owner, and so forth, there's direct execution by the court given to token holders. It works in the same way, or it's structured in the same way, just like banks put a mortgage on a title of a property when they lend money. So the same principles are being used, but through the tokenization process. And here, when we do this and structure it in this way, there's no requirement for litigation, but these rights can be executed directly in favor of the token holders.
Okay, that sounds a bit explanatory. So now the next question I wanted to ask, still on the crypto resolution, there are countries where crypto are not really allowed. So do you think it is possible for this corporate resolution to still be used in courts in those kind of regions?
That's another great question. I think understanding where crypto is allowed or not allowed, or there's nuances of what this means, right? I would say that where crypto is banned, we would need to understand if the use of the blockchain technology is banned. Are they banning Bitcoin? Are they banning Ethereum? Are they banning what is being banned? So to be able to answer, I would need to understand the legal part of how this ban is being effectually implemented by that government. But if I go to kind of a general rule, and we've tokenized real estate assets in more than 20 countries now, there's places where crypto is more accepted than others, but the corporate resolution is accepted in 98% of the countries around the world where you have corporate law. And this is quite clear. The blockchain part, the tokenized part, serves as a tamper-proof way of transferring value between various participants and defining the stake each participant has at the given point in time. If you own 1,000 tokens today, you have 1% of the economic rights that derive through that corporate resolution. And if tomorrow you own 10,000 tokens of that same asset, you have increased your stake by 10x, which means you now own 10% of the economic rights in that asset. And the corporate resolution kind of clearly defines this relationship between you as a token holder and on the other side, the property owner.
All right. To say this was, actually thought about, it makes me really impressed about what you guys are doing, because when you're actually trying to incorporate a particular utility which may work in advantage with the ecosystem, you also have to look at the other side of things like disadvantages and know how to work around it. So I think we should move on to kind of valuation model, because you would agree with me that every property has how they should be valued. And reading through your website, I saw that you guys are trying to have a different kind of valuation model. So I want to really know the, specifically how you guys, the kind of model you guys are doing and the kind of impact it actually has on the property that is undergoing the valuation.
That's a question I really enjoy talking, or a topic I enjoy talking about, because I believe with tokenization, what we are really creating, and if you think of a future where a lot of real estate has been tokenized, and there's a lot of real estate tokens that can be traded between people. Every trade is a price point. And every trade, every transaction creates a reference that you can use to create, large scale models of defining valuation. Here, what we're referring to mainly is that this new valuation models could emerge in the future because the amount of data points created through tokenization and the secondary markets for trading activities will be huge. And it might entace that there's another type of defining the valuation, which is kind of crowdsourced, if you will, because a lot of participants are giving a price to something at a specific point in time based on the volume of how much this transaction is how giving it more or less importance. The more tokens of a specific asset are being traded, the more importance or the more relevance that price point might have. How we look at it currently is we look at real estate as a very traditional asset class that has a traditional valuation. In the corporate resolution, the issuer of the token, so the owner of the real estate asset, has an obligation to maintain a valuation report in line with international standards that is not older than 12 months, which means that they need to renew it every so often. And on the other side, we also have tokens that are then being sold. You might tokenize, I don't know, 10% of an asset's value. And it means that, say, it's $100,000 property, 10% has been tokenized. It means to our protocol that 10,000 tokens have been issued. And it means that each token was priced at $1 per token. Now, some time passes, and now you see these tokens being exchanged on the secondary market in certain volumes on a price of 1.1. Does it mean that the whole property is 10% more valuable than it was originally assessed? I don't know. But if you look at big assets that don't have many comparables, so on 100,000 home, you might have many of those in the same neighborhood. And so, you would all have all those price points. But if you look at a very unique asset, I don't know, the Eiffel Tower of Paris, nobody knows how much it's really worth, right? You have the tickets that people go there and, see it as a tourist attraction. But what's the actual value of that asset? Nobody knows. With tokenization, we could ask the crowds of the internet to give it a price.
Okay, okay, that really makes sense. The project has a whole lot of things to talk about, so I hope you don't mind me trying to just jump from here and there, so you can at least cover a different aspect of the project that I see that are really important to touch on. Hope you don't mind about that. Okay, is that
Sure.
fine?
You can jump. Yeah, yeah, just anything.
Okay,
We can jump
okay.
from one side to the other. No problem at all.
Okay, that's fine. So the next thing I wanted to talk about is the possibility of manipulating prices. And I see this is something you guys also um, are aware that could happen because it always exists in the markets, token manipulation, price manipulation, and even fluctuation of the markets. So what are steps that you guys are taking or what are steps that are going to be implemented to at least reduce those risks that could happen?
Yeah, there could be manipulations of trading activity, but in the end, you always have net asset value. Net asset value is the very traditional understanding of what the underlying asset is worth. So you have this part. On the other side, you have distributed revenues or distribution of dividends, if you will, or or interest. Anyway, the cash flows or part of the cash flows that the asset might be generating if it's a cash flow generating asset, and that offers you to have a kind of discounted cash flow valuation model on the other side. And it gives you in the end a certain return on investment assessment for your investment. So if you're buying tokens at a certain price point, the higher it goes, the lower the APY of that property in a way. So at the same time, the more at the better price you buy that asset, it increases in a way. And I think those two are really kind of the main factors that it's really hard to manipulate them, or you can't in a way, because a property, how much is what the financial projections are, is usually based on lease agreements that are in place, and those define the value of an investment property in the end.
Okay, that's actually nice. So now, since we are talking about numbers, I really want us to move to the actual token because, okay, you guys' utility is actually strong, but then how does your token come in? So something I saw, oh, sorry about that. Let me see. Okay, I actually mapped out something I wanted to ask, and now I'm having issues trying to find it. But something I saw was about the transaction fees. I see that you guys are deducting a 1.5%. I can't find where I mapped out that question, but from
But
what I
I know
remember, I
what
see
you're
you
referring
guys are
to.
mapping out 1.5 percent on every issuance, right? So I wanted you to walk us through how you guys are actually going to allocate this 1.5, because I see that for every 0.5% goes to a particular
Yeah.
aspect of your project. So yeah.
Yeah, so what you're mentioning here is when we were designing the tokenization infrastructure, the protocol itself, we wanted to understand how can we create and align incentives for the key stakeholders um, on a specific real estate asset. And the key stakeholders here, okay, the investor, we understand where they are coming from. They want to access the real estate asset class. On the other side, you have the real estate owner, and you have the marketplace operator, and you have Blocksquare, which is structured as a DAO. Now, what we've done is with this 1.5% transaction fee is we have split it into three beneficiaries. The first beneficiary is the asset owner, the owner of the real estate asset, right? And they get 0.5% on each transaction on the secondary market, but in the asset token. So not in the money paid. We cannot control that part, but the protocol can have control over its own tokens that it generates, right? Then we have the marketplace operator, the basically certified partner that is operating their own marketplace powered by Blocksquare. And they get a third of the total fee. And then Blocksquare receives the last 0.5%. And as a DAO, what it does, it places it back to the market at the par with the valuation. It liquidates it, and then it uses those proceeds to buy back the BST token, the Blocksquare token, and burn it. So creating a deflationary effect on the token supply.
Very nice. So I really wanted us to link this BSPT token to the BST token. So because I'm saying that there are two different tokens, and one seems to be the DAO kind of token. So
Yes.
what's actually the main difference, and what is the reward behind the use case of the both tokens?
So we were now discussing tokenization of real estate mainly, right? And the way we structured the protocol is that for each real estate asset, individually, a new smart contract is generated. And this smart contract creates an ERC20 backwards compatible token that has a limited supply of 100,000 tokens, where 1,000 tokens represents 1% of the economic rights that derive from the ownership of the asset. Now, this type of token is called the BSPT, the Blocksquare Property Token. And we have many of those. If you go to Etherscan now and you type in BSPT, you're going to find at least a couple of the 140 or so properties that we have tokenized so far. So each asset its own token, and that's BSPT. Now, on the other side, we are building a DeFi Web3 protocol. So we have created as well a utility token, which is called the Blocksquare token, which is the BST token. And this one is designed with the following tokenomics: 100 million tokens will be ever possible to be minted into circulation. 40% of this supply has been, or 40 million, have been put aside for incentives on Oceanpoint. So for people to bring liquidity, to stake, to incentivize and boost returns for the first buyers of real estate tokens, to boost people locking in liquidity for medium to short, medium, long term, and so forth. Because we're building Oceanpoint into this liquidity engine that is connecting holders of BSPT tokens with DeFi pools and liquidity. Now, BST, currently there's a bit more than half, so 50% of its supply, and it's planned for the total supply to be out by mid 2028. So until that time, or sooner, maybe even, we hope that the whole system will become kind of self-sustaining, if you will. And how we see this self-sustaining system in becoming into existence or getting there is because the BSPT, so the tokenized assets, they have the underlying assets value, but they also have the cash flows that these assets bring. And these cash flows goes on chain. And these cash flows are then tied into BST with a simple function of buying BST and burning it from the market, decreasing supply. So when revenues are distributed, these revenues go to property token holders. But if these token holders decide to stake them, they receive BST rewards. And instead, the returns of these properties are directed into buybacks. On the other side, we also mentioned the transaction fees, and those accumulate asset tokens, and these asset tokens are placed on sale on the secondary market and converted into stable coins, and from there, BST is bought and burned. And so we do this burns on a monthly basis, and we have so far had not a big amount, but I think we are around 200, closing into 200,000 BST that has been burned so far. So we are kind of proving that this model is actually functioning and that it works recurrently. And hopefully with the increase of real estate assets that we tokenize, this is just going to increase and increase.
Yeah, I think that's a very vital point. The aspect of the burning. Yeah, I think you say you guys are closing at 200, right? So I think it's really going to help to control the circulating supply of the token and possibly increase the price of the token. Now, with these explanations you gave, everything is all linking up to the Oceanpoint, and I see that is you guys' central liquidity engine. Liquidity is a very critical part of every project because without a healthy liquidity, you can't push through with the project. And I think what piqued my interest in the Oceanpoint is the fact that you was mentioned that anyone can participate without legal restrictions. So, and could you walk us through the Oceanpoint, what it's all about, and the three main pillars that you guys have it's resting on?
Sure thing. So we're an infrastructure provider. So we enable with the tools that we build, we enable companies in different parts of the world to run their own marketplaces. In most jurisdictions around the world, when you are tokenizing a real world asset like real estate property, you need to know exactly who is investing, which means you need to have somebody who goes through a KYC process, identifies themselves, and so you create this traceability that DeFi doesn't really know, right? But you cannot avoid it because of anti-money laundering regulation that's in place in a lot of places around the world. So these marketplace operators that work with us, and I think we're now at currently 12 or 13 marketplace operators, they have this walled gardens of where users that have KYC'd and they have given them permission to interact can access the assets that they list. But the liquidity in those marketplaces will always be limited to the amount of users there is, in a way, right? Now, with Oceanpoint, what we're building up is a liquidity engine for the whole ecosystem of these marketplace operators. What it means for the end user is we hope to achieve that somebody can liquidate real estate tokens in a matter of minutes and not a matter of days. It means that you can sell the tokens to a protocol instead of another person on the secondary market. But because these tokens can only be held by KYC or KYB entities, you cannot simply create liquidity pools on Uniswap for them. So Oceanpoint is kind of this connector to automated market making liquidity pools that live, for instance, on protocols like Uniswap. And how we envision this is through a flat coin. What are flat coins are, kind of think of them like stable coins, but their function is not to be stable in value as opposed to the dollar, but as a token that is more like of an index, let's say. And these tokens will serve to facilitate these transactions from a real estate token onto points, and from points liquidate into a stable coin. So the end user receives then USDC or USDT or whatever type of stable coin they want. Now, currently in Oceanpoint, we are at the level of version 0.6. We have tokenized so far 130 million or so worth of real estate assets. We estimate that we need to reach to a level of 500 million so that we can find through that portfolio the core assets that can take part in the first full version of Oceanpoint to serve its purpose of being this liquidity engine. Before that, the curves that would happen are just inefficient, and the
I really want to get questions from the community because I see a lot of people are already dropping questions, and so I'm very enthusiastic about your project. So, guys, let me just go through the marketplace because that was something I that really got me curious. I really found that very interesting because it was more like the first time I'm saying something unique like that. So I see you guys want to create a kind of marketplace where investors can log in and I don't know how you guys intend to make it work. So I really want to know how this you guys have designed the structure of the marketplace and how end users and investors can actually benefit from joining your marketplace and launching on your marketplace.
So the marketplace is basically a platform where you can have hundreds, if not even thousands, of different marketplaces. Anybody, any entrepreneur to enterprise, from a small startup to a big enterprise can use it and run their own um, marketplace of tokenized assets and list the assets, the real estate deals that they want to list. And on the other side, cater to a community of investors that might be local or global, right? The reason for us structuring it this way is because real estate is very local. If you are a good real estate, a successful real estate investor or company in, let's say, in Germany, it doesn't mean that you will be in Austria, which is a bordering country that has the same language. Definitely, if you are, good in real estate, in commercial real estate, it doesn't mean that you will be in residential real estate. So there's specific expertise that distinguishes and gives people that are operating a certain marketplace a certain edge. For instance, we have a marketplace operator in Belgium that is focusing on the co-living type of real estate assets. We have, as I mentioned, the PIME team in the hotel industry in Uganda, and definitely not in hotel industry in, I don't know, in Spain. They don't have the expertise there, but they do have it on their own market. We have a marketplace operator based out of Mexico that is a real pro in creating in the tequila industry, and they have a big part of land where they are building up a tequila distillery and a whole kind of experience in terms of accommodation and as a resort, and they're using our technology. We're now onboarding a new marketplace operator who is based out of the US, and they are targeting and focusing on healthcare real estate assets. So as you see, marketplaces, there might be hundreds of them in different markets with different niche types of real estate investments that they can bring to their communities. Now, from a perspective of the end user, how they benefit from this is, joining kind of the Blocksquare ecosystem is they create one account and they can access hundreds of marketplaces that will populate the infrastructure in the future. They just need to do KYC once, and then they can decide to which operators they want to share their personal information with. Now, the marketplace that you're probably referring to is Oceanpoint's marketplace, where a lot of real estate owners have joined and tokenized their assets, and there you can have a feeling of get a feeling of the real estate assets that have been tokenized so far with our protocol. So we have many partnerships in place. The last one we have announced just a few days ago, or maybe even yesterday, was with Polytrade. In terms of exchanges, we're talking about centralized exchanges and BST as a token. You can go and trade BST on Gate.io. You can go to Bitmart You can go to um, MEXC, and on the DEXs, obviously Uniswap, but I'm the most that I use personally is 1inch um, uh, as a way of swapping tokens. Yeah, and that's kind of where you can purchase BST at the moment, or where you can trade it. We also have a partnership with a broker in Australia, um, and you can find all this information on our website.
I say, okay, what are the differences between Blocksquare's real world asset tokenization approach and the standard method? Did you get the question?
I got the question. It mentioned the standard method. I don't know what the standard method is.
Yeah,
Um,
probably just asking what makes you guys like you have a lot of real
mhm.
estate projects. So what are you guys doing that actually makes you guys stand out in terms of tokenization?
I think, I mean, I would say one of the things is we've started doing this before RWA was a hashtag. We started developing this and end of 2017. And we've gained a lot of experience in understanding what the market really needs. And we've developed the infrastructure in a way where the transfer of economic rights happens. And if we look at how a lot of companies are trying to tokenize real estate, is through the tokenization of shares of an SPV that then buys or holds a real estate asset. And when you tokenize shares, what you're doing, you're tokenizing um, equity, and you're tokenizing private equity and making it tradable. And what you do is you inherit the whole legal um, framework of that regulates this part of the market. And this a lot of time gets you into trouble because you see that there cannot be secondary markets really. That the way how the transfer of shares needs to happen is in a certain way that is not inherent to how tokens are traded on the blockchain. Just for example, if I sell 10% of my company, I need to offer it first to the other owners of 90% of the company, probably. So this kind of things are in many jurisdictions a given, and it's not something you can modify with, incorporation documents. Um, and the way we tokenize real estate, we avoid a lot of these hurdles on the regulation side. We're also able to notarize, so really back tokens with real estate assets, with the underlying real estate assets, create real consequences in the end in case of things going bad. And I think that's kind of a unique approach per se. On the other side, we are positioning ourselves as an infrastructure provider, not a marketplace operator. And I think that makes us quite strong because we partner up with marketplace operators that are really, really able to bring the business and create an impact in their market.
Okay. Next question I have here is okay. Let me unmute Levi. He has been raising his hand since. So, Levi, you have been unmuted. You can ask a question now. Okay. Well, he's taking a bit of time to. Okay, another question that came in here is how could technology solutions by organizations like Blocksquare empower communities and create more trust in the real estate industry?
Um, I think there's a big issue when it comes to real estate financing or the whole world, if you look at it, right? There's this piece of data that is really consistent across the last couple of decades. And that is that 80% of all the capital that is invested into real estate worldwide is invested in just 60 cities. Imagine that, all this money is invested and concentrated in the Londons, the New Yorks, the Sydneys, and so forth. And all the rest is struggling with 20%. If you go to the 90%, of capital, the distribution is not that better. And maybe you get to 120 cities, but that's it. But in the world, we expect to have 10,000 cities by, I don't know, 2050 or something. And this means that all the others are not getting any attention from investors. And the main reason here is illiquidity. Investors tend to stick together on markets where they can trade. It's the same thing with cryptos. People trading on exchanges that have more liquidity are the people that want to kind of trade larger volumes and so forth. And by tokenizing real estate, you can now create a very low barrier to access in any jurisdiction, in any country, in any city, in any municipality. And this can have a profound impact on how the economic, development of that region or city goes further on. Nowadays, people are moving to bigger cities because there's more equality, there, more opportunity for them to be there. And this is ultimately driven by, big institutions investing in infrastructure and real estate in those cities. And I don't see any way around this. And I just see that, the only way to solve it might be tokenization. If we want to retain people to have equality of opportunity where they are coming from and not requiring them to move to another country and another city to hopefully prosperity for their children.
Okay. So another question that came in here was about, let me try to get the question. My hands just mistakenly sent it away. Okay, this person was basically asking about your security, because a lot of transactions are going to happen in your ecosystem. A lot of, back and forth transactions, and all these are going to be registered on the smart contract, right? So what is your smart contract like? Are you guys audited? What's the security of the back end like? That's what this person wants to know.
I just lost you there for a second. What's the security? And you mentioned smart contracts, and then it just
Yeah,
lost you for a
audit.
second.
Are you guys audited?
So we are okay. So our auditing partner is Haken. I think it's one of the most reputable companies in the space. And we conducted several smart contract audits so far. We always try to get to the 10 out of 10 score with remediation and all of it. Kind of the process whenever we develop the smart contract is kind of the same. After that implementation phase is done and internal kind of testing, the standard testing, then we do like an internal audit where a couple of people from the team try to penetrate or create various ways of how to exploit the contract. Then only then we pass it on after these things have been done and modified. We pass it on to Hacken for auditing, and then they get back to us with security risks and concerns, and then we present the final version of the contract to them for the final audit. That's how kind of approach this part.
Hi, Denis. Can you hear me now?
I can hear you. Yeah, you got
Okay,
disconnected.
I yeah, I don't know what happened back there. I really don't just know. So, Denise, are you open to get maybe one or two more questions?
I did have a hard stop at 4 mics, but maybe we can
Okay,
do one
okay.
more.
Yeah, that no, that's fine. We can
All
just
right.
end it here. Um, guys, if I wasn't able to get your questions, you could just don't forget to join in the Blocksquare socials, all the socials, and try to join in their Telegram. And whatever questions you have, drop it in there. And Dennis seems like a very good guy, and I'm sure other of his team are this approachable. So you can always, maybe if they coordinate community voice chat, you can always jump in and ask the questions. But so far, so good. I think I really enjoyed the AMA. It was very clear, and Dennis was quite explanatory and cleared a lot of things on Blocksquare, the utilities they have, what they plan to offer to everyone, investors, owners of real estate properties, and all of that. And there are lots more about them that we were not able to cover. But I really want to appreciate Dennis for coming to Go Diggers AMA. But before I close the AMA, Dennis, do you have any final words you'd like to say before we conclude?
Um, Moonshine, thanks a lot for a great AMA. I rarely find somebody who comes with very interesting questions, and so you've definitely done your homework. So thank you very much. Maybe one of a couple of things, because we have a lot of people from your community here. We're a community as well, and we're building this with the community first approach. So there's a lot of things that people can do to get involved. It's not just being in real estate or wanting to invest in real estate. Definitely not. There's other ways of how people can interact. Um, and here I would like to mention just the regional hubs where we invite people to become dig into our ecosystem, register as ambassadors, and what they can do is they can create their RWA hub that's sponsored by Blocksquare. So basically, we have allocated a lot of funds to enable new communities in the respective regions to create meetups, events, gatherings, and kind of foster innovation and business development in the RWA space. So that's one thing where I really kind of urge, if you are a community builder, take this opportunity. There's quite a lot of funds available for it. Then another thing, anybody who is an entrepreneur, we've now made it really, really cheap, I would say, or accessible. Cheap is not the best word. It's accessible for anybody to launch their own marketplace. So if you are an entrepreneur, if you are a builder in Web3, and see real estate organization as something that might be the next big thing in your country, connect with us, and we have this amazing launch pad through which different projects are raising funds to start up their real estate tokenization business. And that's kind of the two things I wanted to conclude with. So thank you again, everyone who participated.